As China swiftly announced retaliatory measures targeting Trump's tariff war.
Insurance regulator IRDAI warns health and general insurers of rising commission payouts. Sources say the regulator may introduce a cap on commission payouts if the insurers fail to take corrective steps. That's a CNBC-TV18 exclusive. Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we aim to get you all the key data points to prep you up for the next trading day. I'm Reema and with me is Vinny. Hi.
Hi, Reema. Interesting day, right? Coming in. We are recovering from Monday blues. So did the market recover from those reds and day's lowest point today as well?
Indeed, it was a resilient session for our markets. At the day's low in the morning, given the weak global cues and the handover from Wall Street, the Nifty went down to levels of 21,965. And after that, we staged quite a bit of a recovery with the Nifty defending that 22,000 mark yet again. It's an important support and we managed to hold on to it. The mid-cap staged a recovery of more than 1,000 points and the index finally closing marginally in the green, but the small cap index had a much better session and the advanced decline ratio turned in favor of the gaining side. When we started trade, it was about a 1:4 advanced decline ratio, and by the close of trade, it was about 3 stocks advancing for 2 in the red. Sectorally, it was PSU. So whether they're oil and gas PSUs like oil marketing companies, ONGC, defense names like BEL, State Bank of India was a big mover with a 3.5% gain. So PSU banks, on the front foot today. These were the gainers on the way down. Two-wheelers took a big beating. So Bajaj Auto, Hero MotoCorp under pressure. Eicher Motors down nearly 2. IT, FMCG, the traditional defensive names also closing in the red.
Absolutely an interesting day coming in there, but let's get started with the show and we'll tell you what we've got lined up for you all in the next 20 minutes with all the big news and the key developments on D Street, top corporate voices and events to track ahead. Let's kickstart the day today with the market action that has happened, and we'll go across and talk to Hormaz as well in terms of what is happening in today's trading session, what were the top movers and shakers, what was on the radar of SBI, and all of that in the show. So Hormaz, let me take it to you as well. First, what were the top movers and shakers in today's trading session?
Another resilient trading session, as you guys just mentioned, right? The mid-cap index recovering from the lows ending and the small caps having a better day. But the one sector that stood out right from the onset and regardless of the market move was the defense names. And that is also taking forward from the overnight rally seen in the European defense stocks. Bharat Dynamics, Garden Reach. Bharat Dynamics actually ended at the highest point of the day. Most of the others cooled off, but still ended up with gains of anywhere between 3 to 5% in today's trading session. The newsmakers were plentiful today. Gensol Engineering, with that announcement that came in later in the afternoon, a 20% lower circuit. The stock is now down almost 65% from its peak. HPCL and BPCL, of course, the oil marketing companies did well today because of the fall in crude oil prices. Zomato and Swiggy, of course, having a good day because of the positive brokerage note. It was a good day for PSU banks, as you just mentioned. They were among the top losers in yesterday's trade, but they saw a bit of a rebound today. SBI on the back of the double upgrade that came in from Citi, and it rubbed off on most of the other state-run lenders as well. Stocks that did well on the back of strong volumes. And some of the underperformers featured in this list today. India Cements was up 15% in today's session. Jyoti CNC, Concord Biotech, Vijaya Diagnostics all seeing very healthy gains and on very strong volumes as well. And lastly, stocks that ended at a 52-week low in today's trading session included the likes of Bajaj Auto, Hero MotoCorp not doing well after their sales figures, both ending at the lows of the day. Sona BLW, IIFL Finance and Astral 2 ending at the day's low. Back to you guys.
Thank you very much for that, Hormaz. Jai Bala from cashthechaos.com is still with us on the show. Jai, thank you for joining in. Just in the near term, we've spoken about the big picture, but in the near term, say for the next 2 days, what is the trade on the Nifty Bank, which has shown a little more resilience?
Yeah, the trade is to do nothing if you're going to be focused for the next 2 days, because the markets have come very close to an important support at 21,800. So if we are just evaluating if the markets are going to hold, we've got a flat close today. So the markets aren't giving a definitive signal for the very short term. The banking index, although broke the January low by 3 points, it currently seems to be holding up well, but everything comes down to HDFC Bank if HDFC Bank were to break below 1620, that will be having a very negative impact on the banking sector as well as the overall market due to its weightage. So do nothing for the next few days. Wait for the next couple of days. Wait for a signature reversal to come through. If that happens, we can see something like 3 to 4% rally on the mainline indices, maybe slightly larger on the mid caps and small caps.
Okay, mid caps and small caps, and anything in terms of specific sectors, Jai, that you would be looking at as well. You know, in the last 6 months, we've seen pharma see a good fall. We've seen real estate also see a fall in the last few months. So anything on that front that looks interesting?
Yeah, the market's momentum to the downside is waning for capital goods, realty, metals, and Nifty PSC. But the damage over the long-term charts on the Nifty PSC has been done. So you might want to not look at them as investment candidates, rather than you must be looking at them as trading candidates. So if you're going to keep your eyes open for the counter-trend rally, look at these 4 sectors: cap goods, realty, metals, and Nifty PSC.
Thank you. Let's get to State Bank of India. That was the big winner after Citi double upgraded the stock to a buy, raised the target price to. Abhishek is now joining in with the details. And what makes Citi so bullish on State Bank of India?
Well, Rima, to begin with, Citi actually met the management of SBI, after which, they have double upgraded the recommendation on the stock to buy from sell, increased the target price by more than 15% to 830 per share. The key takeaways from the management meet was the management outlined multiple levers with respect to, cost optimization as well as yield levers that they have. And they also have relatively lower EBLR, that is external benchmark, lending rate. Loans, they are about 28% of their overall portfolio. NCLR hike pricing should actually help them maintain the net interest margin. So the management continues to guide for net interest margin of more than 3% over the next couple of fiscals. However, Citi is confident that they will be able to maintain the net interest margin anywhere between 2.9% to 3% over the next couple of fiscals. So unsecured retail slippages have been curtailed to 0.5%. The SMA2 pool, which is overdue between 60 days to 90 days, that's also been reined in. So they expect the credit cost to be less than 50 basis points for the lender. Now, restoration of risk-weight asset to NBFCs should free up CET1 by anywhere between 25 to 30 basis points, and weak market sentiments allay near-term equity raising for the entity. So they are factoring in 13 to 14% growth and curtail credit costs, thereby making them raise their estimates by 1 to 2% over the next few fiscals. The stock has corrected 18%, 16% and 10% in the last 3 months, 6 months as well as 1 year, and has underperformed Bank Nifty by 10 to 12%. So they say that the valuations with respect to price to book value of just 0.85x is inexpensive for return ratios, that is ROA of 1% and ROE of 15% that SBI stands to deliver. Back to you.
Okay, Abhishek, thank you so much for the update coming in on SBI double upgrade today. We've seen the stock buzzing in trade as well. Jai, coming to you for SBI, what are your thoughts coming in? Citi clearly is quite positive on this one. Raise the target price, double upgrade coming in. And in the last couple of sessions, we've seen the stock see a good move as well. Yesterday also it was in the green. Today also it's strongly and comfortably closing in the green. So your thoughts?
Yeah, SBI had a great potential to drop to 550, but given that it's finding support at the minor support level of 680, we need to see what this stock is doing over the next couple of sessions. If it's just a counter-trend bounce, I don't think this rally is going to exceed something like 750 to 760. And probably go down after that. But right now, it's looking positive in the short term. Maybe, if it is bullish, the stock needs to cross 780 to 785.
Let's get to the other important story today is that lately many promoters have been buying stock considering the weakness that we've seen in the market. And even veteran investor Motilal Oswal's Ramdev Agrawal highlighted this during his conversation with us, saying that it's one of the important metrics to track to know whether the market is turning around, whether promoters have confidence in their own share price. Nigel is here with a list of promoters who have indulged in such purchases recently.
Well, that's right. There is a buy side and there is a sell side. And then there's the promoter who's the most supreme analyst because he knows his company the best. Just went through a few details. And off late, there have been some promoters that have been chipping in there, as Mr. Agarwal had pointed out as well. Case in point being TD Power Systems. Well, the stock was up close to around 6% in today's trading session. Yesterday, they disclosed on the exchanges that the promoter entity had bought close to around 15,000 shares. So that's why the street liked that. But if you look at it in the month of February itself, stocks like JSPL, their quarter 3 numbers were a howler because the capex spend had gone up. But the promoter has shown the fade. After the kind of correction that we see in the stock price, they have come in there and they have bought close to around 1% stake, which is around 6 to around 700 crores approximately. And that's why the promoter holding has now gone to more than 62%. Maharashtra Seamless, the promoter entity over the last few years has gradually been increasing their stake and they've continued the same. In the month of February, they bought 0.5% from the open market and now the stake goes up to around 68.5% or thereabouts. A couple of other names as well come up for you on the screen, and there have been some promoters that have been buying consistently. Quest Corp, I recall the stock had seen a correction, and towards the end of 2022, at the start of 2023, the promoter entity went ahead and bought some stake. And in the last couple of quarters, they've increased their stake by close to around 0.5%. But if you just rewind a little bit behind, you'll see that select promoters, they've said they're going to be doing this, and they've gone ahead and done it. You have Gateway Distriparks, which is the promoter entity of Snowman Logistics. Over the last few quarters, their stake has gone up from around 40 to around 50% approximately. Fairchem Organics, we don't talk about the stock too often, but everyone's been talking about selling in the past quarter. Well, in the past quarter, that's the quarter ended December, they in fact went ahead and bought close to around 2.5% from the open market. And finally, Mangalam Cement, that's the other stock in there, where the promoter entity in the last quarter or so has bought increased stake by close to 100%. So the best analyst of a company is the promoter. And when they buy some stake, it sends out a positive signal. Back to you guys.
Okay, Nigel, thank you so much for the latest update coming in on this front. Jai Mangalam has, I beg your pardon, Nigel has mentioned a lot of stocks right now as well. Your thoughts on any of these names? Are you looking at any of them closely? TD Power, JSPL, Maharashtra Seamless, anything?
See, cement stocks, some of them seem to be completing their corrective decline. So Mangalam Cements that you spoke about, that might be a good candidate for a short-term bounce. If Mangalam Cements were to take out SAN 51 on a closing basis, it has good potential to rally in a meaningful way, something like 15-20% from there on. So of the names that have been mentioned, I like Mangalam Cements and Fairchem, although I don't know exactly which sector it's in, but as a related field, I'm looking at SRF Limited in the specialty chemical space. That's looking very interesting for me. I don't know if Fairchem Organics is in the same space, but I think if it is, it's a far weaker candidate compared to SRF.
Okay, let's get to the other story that we've been tracking. Insurance regulator has asked general and health insurance companies to take corrective action against rising commission payouts. As per sources, the regulator has threatened to limit the commission payout if the insurers fail to take corrective action. Yash is here with the details.
Well, certainly some tough talk coming from the insurance regulator IRDAI to the general as well as standalone health insurance companies. What has been the primary concern for the regulator? It is that general and health insurance companies are spending excessively when it comes to their commission payouts to the distributors to sell the various general as well as health insurance policies. If you remember, about 2 years ago, that was in April 2023, the regulator had given some relaxation to the industry in terms of commission payouts, saying that we will put a limit on the headline total expenses which any insurer makes. But under that total expenses, which has two elements, commission as well as operating expenses, we will let you decide, that is the insurers decide how much they want to pay as commission and how much they want to pay as operating expenses. Now, what the regulator, according to our sources, has observed in the last 2 years is that companies are paying excessively and the growth in the commission payout has been very abnormal in the last couple of years. Now, as far as that high commission payout is concerned, that is being compensated by lowering of operating expenses to stay under the headline limit on the total expenses of any insurance company. What this does is that it restricts the insurance premium or the cost of insurance products to come down for the eventual policyholders, which was in the first place the intention of the regulator by putting a limit itself. This has been the large concern for the regulator. What we've been given to understand is that the regulator has told these insurance companies that when the expenses of management guidelines come up for a review next year, that is 2026, the regulator, if these insurance companies do not take corrective measures, which is reduce commissions and pass on the benefits to policyholders, will also consider putting a limit again on individual commission itself, which will be a big negative because that will restrict the kind of expenses which these companies can make towards selling those policies itself.
Okay, Yash, thank you so much for that. Surely we'll be keeping an eye out, going forward also on the general as well as health insurance companies. Jai, your thoughts on any of these stocks that you have, the ICICI Lombard General Insurance or in terms of Star Health, any thoughts on that one, on the general insurance space?
General Insurance of India, General Insurance Corporation, that's trying to find a strong support at about 347. And that's probably the strongest in the candidate, the insurance space. LIC India is an avoid, and when it comes to ICICI Lombard, that was probably it's also a very strong downtrend. So I would generally avoid stocks within the space, with the exception of GIC India.
Jai, thank you very much for joining in and sharing your thoughts on the market. But as we slip into a short break, we leave you with market commentary that we got during the day.
The models that we've run have shown that of these tariffs, the economic damage is probably largest for Canada and Mexico, given the significant ties to the U.S. economy. But the U.S. is not immune from the negative effects of these tariffs. I think even if these tariffs go into effect, my assumption would be that they would not stay on for a durable period because of those negative economic effects that I mentioned and the negative effects to equity markets you're likely to see. That the stagflationary effects on the U.S. are kind of amplified, and you get a large negative hit probably over a several quarter period, over 1% off of U.S. real GDP, and you get a sizable boost in inflation. You're looking at U.S. real GDP that falls over a several quarter period by over 1 percentage point. And I would expect the spikes in U.S. inflation in the short term to be 0.5 percentage point or higher.
As of today, it looks like FPIs are aggressively selling. On Friday, net of passive funds buying of about 8,000 crore. The gross sell number was about 20,000 crore. Never stand in front of a running train. If they are selling aggressively, undoubtedly buyers will continue to buy at lower and lower prices. And as long as their selling continues, we think market's unlikely to settle. Buyers will continue to buy at a lower and lower prices. In terms of valuation, now Nifty is trading little below its historical average valuation. This is a fair value market. The excesses of the past has been corrected. And now this is probably time for long-term investors to start accumulating.
Welcome back. Now let's take a quick look at the key corporate voices. So first up, Bajaj Auto's management is quite optimistic despite the turbulence in February's auto sales. He expects the industry to grow by 6 to 8% in FY25. Further, the fundamental drivers for the industry remain intact, and the company expects a recovery in domestic sales by the end of the month or early next month.
And next up, we also had Jupiter Wagons that was buzzing in trade today after its electric vehicle arm, Jupiter Electric Mobility, launched its first light commercial vehicle EV, TEZ, and the vehicle will start rolling out to dealers in March itself. Now, to the wheels business, the management says it is a key focus area for the company with around 2,500 crore rupees investment planned for this expansion. It expects revenue to be around 300 crore rupees in FY25 and doubling to 600 crore rupees in FY26.
And before we wrap, let's get you the key market events to watch out for tomorrow. Vamakshi standing by.
Well, absolutely, Rima. Lots to watch out in the trading session tomorrow. Let's first look at some of the economic cues that will be in focus. China's Caixin Services PMI data will be out tomorrow. India's S&P Global Services PMI, as well as the same from the US, will also be out tomorrow. So we'll be keeping an eye out on that. US crude oil inventories will be another important factor that we'll be keeping an eye out for. As far as corporate action is concerned, keep an eye out on Anand Rathi because the stock will go ex-dividend. The bonus is in the ratio 1:1. As far as stocks to watch are concerned, we'll be keeping an eye out on PSU banks, and that is because the FinMin performance review meeting is scheduled tomorrow with the heads of all these PSU banks. All of these counters will be in focus tomorrow. Bharat Electronics will be another counter we will be watching out for, and that is because a board meeting is scheduled tomorrow in order to discuss the interim dividend for FY25. Apart from that, several other important events to watch out for. That includes National People's Congress, which opens in China. Apart from that, lastly, we'll be watching out for the commentary that comes through from the US President Donald Trump. He will be addressing a joint session of the Congress. So those are some of the key events that you need to keep an eye out for.
Okay, well, Vamakshi, thank you so much for that. But with that, it's getting down on this edition of Markets Forward on CNBC TV18. Thank you so much for tuning in. More news and updates on the other side, so don't go anywhere.